Hello, everybody. Thank you all for coming. Thank you, Sir Winston, TBF 430, Sean Donnelly, K8, and American Beishinger. Wow, the whole team is here. And TND Tesla's here too. She's back. Anyway, thank you all for coming. I did a video yesterday about OTC desks. I don't think anybody understood it at all, so here goes nothing. But as a follow-on from that, there was something I did post that did get some attention from people, and that was AI predictions. And the question is, are they possible? And the question I get is, can we hit 175K? And my job is to answer questions. So I'm going to try to answer that today. And this is a theoretical analysis of a path to 175K. It doesn't mean we are going to get there, ladies and gentlemen, but we could. And the numbers were very, very interesting. So we'll talk about this. We'll talk a little bit about miners. We'll talk about people in the European Union wanting a tamper-proof currency and how the head of the ECB does not want that at all. We will talk about the path, a whole bunch of on-chain stuff, a whole bunch of dominoes falling, some stuff out of China. We got Forbes and the Alchemist on Forbes magazine and so much more. And yeah, and I'm aware that sometimes people get onto Forbes magazine and afterwards things can go bad. But remember, they're only the few isolated cases. Anyway, let's get into it. And not financial advice. Thank you all for coming. And shout out to Patreon too. We have Soulbull, who's often here in the chat too. Oh, the Patreon will blow your mind. Well, thank you for saying that. It's fun indeed. And yeah, let's get into the Bitcoin news first. And then we'll get into the deep analysis and a whole bunch of charts. First of all, shout out to friend of the channel, Fred Kruger. He had a very interesting perspective on AI and DeepSeek. DeepSeek versus Bitcoin. DeepSeek is incredibly bullish for Bitcoin. And he says the main competition for store of value is US tech stocks, just got less reliable. I thought that was very profound because there is huge correlation I've been talking about for years between the QQQ and Bitcoin. Bitcoin's considered a risk-on asset. But since DeepSeek happened, it kind of put a little bit of a torpedo shell in the hull of the whole AI narrative. But again, not really. But it's overblown. But so that's how markets work. Things get overbought and then things get oversold. Things take a breather, etc. That's where we are. But it is an interesting angle on Bitcoin. And because of that, too, so much other stuff is happening. A new one, a new state, South Dakota, Bitcoin bills, more strategic Bitcoin reserves. Like literally at this stage, the whole country will be doing them. And Europe is waking up and other places all over the planet too. So that is South Dakota. Shout out to South Dakota. And I've been to either one of them, north or south. I can't remember. It was in the early 90s at a banking conference. Madness. Was it? I've been to Wyoming as well. Fantastic places. Anyway, Ohio is also coming to the Buckeye State. The reserve bill passes out of the committee. And these SBRs are spreading like wildfire. Shout out to Vivek too. This map, by the way, because of all these changes, is only a day old and already out of date. And here you can see all of the states, which will be forever changing. Soon it'll be all gold. There'll be no black, but you can see the coasts, the left and the right coasts are always the last to follow. And as I covered before, there is huge correlation between red states and Bitcoin. Red states, orange states. The blue states, they're going to lag, but eventually everybody will be in, or will they? We'll talk a bit about what's happening in other parts of the world too. And shout out to friend of the channel as well, Michael Saylor. He hits the Forbes magazine cover, which is a big deal, by the way. And they refer to him as the Bitcoin Alchemist and the volatility virtuoso, as he says. Vitality is volatility, or volatility is vitality. Fantastic, again. And because they're in the quiet period right now, and because I can see it on the chart, Michael Saylor is not ATMing today. Therefore, the MicroStrategy price is actually going up, which is good for once. And this is other crazy MicroStrategy news, because this is the Bitcoin and Bitcoin Proxies series. MicroStrategy does plan, potentially, rumored, from a real estate magazine, to rebrand to StrategyB instead of MicroStrategy. Interesting. And really will show how they are completely focused on nothing else but Bitcoin. We'll see if that happens and what that means to business, because basically, yeah, they are a Bitcoin business. No ifs, ands, or buts. And we saw yesterday in the Tesla earnings call the huge impact of how Tesla had marked up its Bitcoin holdings, booking a $0.6 billion gain on their Bitcoin bags. They own about 1,500 Bitcoin and shares up and after hours, etc. But just think what would happen if MicroStrategy does the same thing. Again, it is theoretically possible that they could be trading at a PE of 5 if, depending on exactly how they mark to market the Bitcoin that they hold and update their earnings per share. It could be crazy, and it'll get a lot of attention too. And that all ties into the Bitcoin yield as well. So moving on from that news, some more news too. Let's talk about the EU. This is very interesting. The European Parliament representatives want Bitcoin as a tool for protecting against inflation and state control. I found this very interesting. This is René Aust. He's a member of the German AfD party. And I hear people say, AfD, oh, that's bad. Well, no, AfD is logical. And they might, maybe, potentially follow the way of what's happening in other parts of the world. But they are in favor of Bitcoin as a crucial instrument for safeguarding citizens' financial freedom. I thought that was wonderful. And since 2001, the euro has lost more than a third of its purchasing power, probably a lot more if you measure it correctly, which is why many citizens want a tamper-proof currency. I'm going to use that again, tamper-proof. Don't mess with it. But some people do not want this at all. They like the tampering, and that's the beauty of being close to the Cantillon machine. Shout out to Christine Lagarde. She says, like, she's confident that Bitcoin will not be added to the reserves of any central banks of the General Council because we like printing our own money and having that control. And remember, those who are closest to the money printer make the most wealth. All you have to do is look at a chart in the United States of the top 1% and how all the money that was printed basically went into the top 1%'s back pockets. Nobody else got it. That's how the Cantillon effect works. If anyone wants a refresher on that, it's worth checking in on again. And again, the reminder around 14% debasement. If you're not making 14%, you're not treading water. Now, the ECB is either totally confused or misdirecting. And maybe they are scared of what happens next if they adopt Bitcoin and can't manipulate the monetary deficits and currency through the EU bond system that has kept these people alive and kept these people very rich. I'd love to know her net worth, by the way. If anybody knows, let me know below. But this is also from Cal Benz, talks about how they will not get into it because choosing a model fueled by rising debt and rising taxes instead of growth and lower taxes and shrinking debt in the long term isn't sound. It is sound, but it doesn't play to what they want. But not all European countries are the same. And the Czechs flip Lagarde the bird. Shout out to Sanjay, who gave me that expression this morning. The Czech National Bank is moving ahead to include Bitcoin as part of their reserves and sell some of their gold for it. So just like the US states, European countries are trying to follow as well. And this is a big part of the thesis for where we go next in terms of Bitcoin price. And even there's rumors, again, these are not steadfast. I couldn't get an answer out of Xi as to exactly what he's doing. But apparently, per a lot of social media posts, China is allowing retail, individual Bitcoin ownership. But I haven't found any concrete government documents on that yet. But rumors are coming that China will get into it too, which would be interesting because they do have a CBDC, which is an Orwellian spy coin. And Bitcoin could undermine that spy coin. So it would be a surprise to me. Anyhow, you can see the pattern here. Tamper-proof currency, spy coins. What's in your wallet? Let me know. Let me know. And another little bit of minor news before we get into the rest of the story in the charts. Hive is growing hash at last. Bitfarms sells Paraguay site to Hive mining for $85 million. And Bitfarms wants to go back and focus on the US only. Interesting, and there's many dimensions to why they're doing this. It could be because of the new regime and the new Bitcoin friendliness of the US, and now firms like Bitfarms are coming back to the US, which is good, interesting. But what's even more interesting is Hive. Hive ranks really well in my model and has done for a long time, but I always was kind of perplexed by the fact that they didn't really grow their hash at all. They just stayed lean and mean. But all of a sudden, they are going to do a lot to their hash and hoping to add 25 exahash by September 2025. Pattern in the numbers. I like it. And per my last miner video a week ago, I think, or a few days ago, you can see Hive ranked second on the scoreboard after CleanSpark. Now, when they jack their hash from, I think they have 9 exahash now, adding 25, take it to 35, 34, that will change the ranking here significantly. So we look forward to seeing that happen as well. Now, let's get into the charts. First of all, the ugly charts. I'm afraid to say I have none today. Let's get into the good charts. First of all, the gold charts. 44,000 Bitcoin have been purchased this January so far. We are talking 20 trading days less, 19 trading days because there's a couple of days off. 44,000. Remember, only 450 Bitcoin are mined per day. That is a savage amount of accumulation. And that's the whole part of this thesis. Bitcoin is hard and scarce, and it's being bought up like mad. And money flow is back to positive. We did have a negative day the day before yesterday, but back to positive today. In fact, Grayscale bought over 100 million yesterday, which was quite positive as well. So again, that pink line is what you've got to focus on. We have been in the biggest accumulation period ever since about day 210. We're day 263 now. So the last 53 days have been on fire. And this is what we're going to get into. Who else is buying? But before, let's shout out to CheckMatey, who has this beautiful little chart. And he refers to the paradox of scale. Now, we saw, again, just want to step out for a second. We've had the most incredible last 2 years in Bitcoin and crypto and other assets. People are still frustrated. So I still struggle to understand why that is. But let's take a view of this because this is important for us to figure out where we're going in the future. Now, the crypto market has had, the ETFs pull in about $500 million a day on average per day, which is huge. And that's reflected here and here. In fact, the green line shows you kind of that average of exactly $500 million a day. And it's crazy. But per this chart, the question is, you can see Bitcoin's price even over 100 grand after a whopping increase up from 15,500 to 105,000 right now as I speak. The question is, where can we go next? And we can see that per all the global assets, Bitcoin is tiny, absolutely tiny. Private equity is many multiples the size. Then precious metals a lot larger again, and commodities and equities and bonds and fiat money and real estate. Basically, Bitcoin is piddly. However, with the approval of the ETFs a year ago, we have unlocked vast new pools of capital. And this goes back to what Fred said at the beginning. Maybe somebody stuck a pin in the AI revolution, and these pools of capital will look for a new home. Maybe some will leave equities and go to Bitcoin. You can just see how small it is. And the question is, what happens next? And how much do we need to get to raise the price of Bitcoin up to 175K? That's what I'm going to try and answer today. It'll be a little bit tricky, but it'll be good. But first, we have some on-chain charts to look at because that sets up where we are. First of all, look at since the ETF started, they have sucked in a ton of Bitcoin, even 44,000 over the last 20 trading days, which is insane. But you also have this combined with the drop of Bitcoin on exchanges, especially since November, and it shows the market is changing. Changing indeed. And people aren't sure exactly what's going on. As I said a long time ago, back in, I think it was March, I was looking at a huge amount of 2024, a huge amount of long-term holder Bitcoin sales. I'm like, why are they selling? And we're so early in the bull before the halving. And the answer was, I think they were selling to move to ETFs for safety, because self-custody is dangerous for many people. Now, so we have the balance on exchanges tanking and the accumulation rising. And here, if you look at another zoom out picture from Glassnode of the balance on exchanges, you can see balance on centralized exchanges have fallen to 2.7 million Bitcoin, down from about 3.1 million Bitcoin, and the high was about 3.3 million Bitcoin. But the most important thing is the pink line here. All right, we are back at 2018 levels of the amount of Bitcoin on exchanges. And that could bring about a supply shock. That's what yesterday's video is all about. A lot of coins are being withdrawn by investors. A lot of investors still keep their coins on exchange because they're there. It doesn't mean they're for sale. It's just because they do not trust self-custody. Also, we see a big decline because maybe now the market's saying what I said a year ago. People are shuffling or reshuffling from self-custody wallets into ETF wallets managed by custodians, like the BlackRocks and the Fidelities and the Coinbase, who's managing the custody on behalf of those people too. So that's the first part. The exchange, balance on exchange, is falling fast, and the accumulation by the ETFs and Saylor is huge. Also, this is also reflected here. This chart shows the long-term to short-term holder supply ratio, showing you these distribution dynamics over time. And a rising trend signals dominance of accumulation and hodling behavior as fewer old coins are spent and more migrate into long-term holder status. And conversely, a decline in this metric indicates strong distribution by long-term holders at the present moment. And in each case, the market typically rallies for a month after the peak sell side, which suggests lessening sell side that we're seeing right now and breathing room for prices to go higher. So towards the end of the year, when we first got above 100K, long-term holders were selling. They're like, that's it. I need some lifestyle chips. I want to buy that boat, that house, that whatever, the vacation, kids' education, pay off debt, whatever. Profit taking was happening. But that has slowed. Now we have time to go up again, especially with the crazy accumulation we're seeing. And another view of capital rotation between the long-term holders and the short-term holders, you can see here, this chart has about 1.2 million coins changing hands since the long-term holder supply all-time high of about 14.3 million in December 2023, right before Christmas, 14 months ago. And during the recent rally, above 100K, another 1.1 million Bitcoin have been transferred from long-term holders to short-term holders, representing an impressive inflow of demand to absorb this supply, again, at prices above 90K. So we are still early, and this stuff is being bought up. Many people felt once you get above 100K, nobody's going to buy it. It's too expensive. Well, that's not the case at all, which is good to see from the charts. Now, where are we so far in the cycle? Do we still have more upside? Because you go to crypto Twitter or whatever, you got some views saying, oh, we've topped out already. We're going down from here. It's bear market next. I've read that 1,000 times. People believe it, and that's fair. I don't care. But when I look at the data, it tells me a different story. Now, in this current cycle, you can see the realized cap has grown 2.1x so far, well below historic cap peaks. Like we had 5.7x in the 2018-2022 cycle, and in the 2015 to 2018 cycle, which is very similar to what we are now at 21x. And you can also see the clear change in the gradient as each cycle enters the euphoria phase of the bull market. We have not hit that yet. That's the key message. And I was going to call this video, instead of can we hit 175K, I was going to say when euphoria, but then I decided people like concrete numbers. So that was the toss-up. Now, let's look at this euphoria stage and if and why and will it arrive. So if we look at where we are right now in the 2023 to 2025 cycle, the relative low set in 2022 aligns with the possible transition into the euphoric phase. We are still technically, per this chart, in early bull, early bull, early bull, early bull, and after comes euphoric. Will we hit euphoric? All signs say possibly yes. But we need, this is the key, we need a new influx of more capital to drive up demand. And I'm seeing that in all signs around the world. Also, what's very interesting is we are up a large amount from the 15.5 bottom, and that's reflected here. So far, we're up 6x from the bottom since 2022. And 6x is very similar to the blue cycle, 2015 to 2018, at this exact point in time. The green cycle, 2018 to 2022, ran a little bit faster, maybe due to C19 money. Who knows? And the 2011, 2015, that was so immature, such coming from a low base, so you can't really discount that. But cast your eye on the blue cycle. That's what we are like right now. And we've still done a 6x. We're not going to do 113x more. No doubt about that. But the question is, where do we go next? And that's what I want to get to now with some simple math. First of all, the new whales. These are players that are coming in. And this is a stunning chart from Crypto Quant. The share of new whales in the Bitcoin market just hit a new all-time high. And this is drawing attention from analysts. They have now reached 60% of the total realized cap of large players from Axel. And this is significant. So we see some of the transition from old long-term holders to new players, but the people buying all the coin are whales, which are 1,000 plus Bitcoin bags, at least. Now, this brings me to, can we get to 175K? Yesterday I shared this. The numbers are slightly tweaked. There was a slight error in one of the formulas where it included a row that shouldn't have been included. Anyway, it's fixed now. But per this, the average AI Bitcoin target, okay, is 194,200. You can see here, some are very high, like Meta's Llama 3.1 is 250K, and the low one is 156K from DeepSeek R1, which was in the news a lot. That is interesting. Now, when we go forward and we look at this, I found this to be very striking from Ali Charts. Coincidentally, I'm remembering all these numbers. And the Maya multiple, which is 2.4x the 200-day moving average, is 184.5. Call it 185K, which is very, very close to this number. Claude 3.5 Sonnet, 185K. I don't know if that's a coincidence, but that is uncannily close. But the question is, can we get to 175K? Because that's the number I'm anchoring on, not the average of the AIs. I think they might be a little bit too high. But what would it take to get to 175K? And this is using this chart here. And this is, again, from Czech on Chain, CheckMatey. And he talks about large numbers, and he looks, I think he mentioned in his article that $1 million is a large amount of money for one person. But in places like Australia, you can only buy a tiny apartment for $1 million. And $1 billion is more than anyone can spend in their entire life. The question is, how much money do we need to flow to take us up to the level where we would like to get to? And when you look at the ETFs, they took in about $40 billion since they began a year ago. And since then, the market cap went up a lot. The question is, CheckMatey believes to get to 150K, you need another 250 billion more money coming in. This is where him and I disagree. Now, and I'd love, if you're out there listening, CheckMatey, I'd love to do a show with you, and you and I can do our multipliers together, because I know where you're coming from and I can back into your math, but I have my own version of the math. And I don't think we need $280 billion more into ETFs to take us to 150K. I think it's a lot less. Let me show you my logic. Okay, and this is just looking at two players. This is looking at the ETFs and Michael Saylor. So the spend over the last year, Michael Saylor spent $42 billion on Bitcoin. The ETFs spent $40 billion on Bitcoin. If you add those two together, it's pretty staggering. Now that $42 billion from Saylor is at the price currently multiplied by the amount that they purchased, and they've been on a rampage purchasing over 250,000 Bitcoin in the last year or so. But if you break it down and you look at the Bitcoin market cap before Saylor started buying hard and before the ETFs were launched, the Bitcoin market cap was 759 billion. The market cap today is 2.1 trillion. So it's gone up $1.34 trillion, which is big. Now, if you just look at the Saylor and the ETF purchases, you calculate a multiplier of 16.35. And this number is important because this is the multiplier we need to take now. I believe the multiplier is going to be far higher. It's going to be 21 to 42 to 56, maybe 112, depending on how much sell side pressure there is from the long-term holders. And we don't yet know exactly how much the long-term holders are selling and converting to ETFs. We'll find out. Maybe, never, but we'll see. But the question I had is, what would it take? How much money would it take to get to 175K? Well, if Saylor spends another 40 billion and the ETF spend another 40 billion, call it 82 billion, the increase in Bitcoin market cap will be, based on the multiplier, 1.34 trillion, which would take the total Bitcoin market cap to 3.441 trillion, which, divided by 19.7 million Bitcoin, will be a $175,000 target. So, literally, before we take into account any of the US states that are going to be clamoring over Bitcoin real soon, maybe a US strategic Bitcoin reserve, maybe other countries around the world, then things will really kick off. That'll be way more than what Saylor and the ETFs can purchase. I still do believe the American ETFs will do at least 40 billion. I think Saylor will do at least 40 billion. So that's coming. And based on the multiplier, depending on the sell pressure, which we cannot fathom at this stage, because I do believe long-term holders are 70% done selling. But if we do go to 175K, maybe a lot more lifestyle chips will be taken off the table. We have to see. We don't know the answer to that yet. But just these two players alone, if they continue to do what they did last year, and the selling is not as extreme as the same level of selling we have now, which I don't think they'll repeat. It'll be less because they're 70% done. I think it's theoretically possible to get to 175K. And the fun meme of the day, the last few days of cheap Bitcoin could be upon us. We don't know. We don't know. The dominoes are falling. The game theory is happening. And Bitcoin's scarcer than ever before. And there's a lot lost. So that's the story for today. We'll see. We're already very happy at 105K. It's already a fantastic dream. Can we go higher? Absolutely. But it all depends on who is going to be selling and at what level. Bitcoin Only players will be here after the show. Thank you all for coming. Hope you liked the video. And thank you to the mods in the chat too. And I hope this was less confusing than yesterday's video. Thanks all for coming. Have a good night. See you tomorrow.